This is our Forex blog for June 11th, 2013, and there's hundreds of ways to trade with our software. For the last 8 or 9 years, we've pretty much focused on having currency meters that shows you which currencies are strong, which ones are weak, and basically every day you focus on buying the strong versus the weak. This would be the currency meter right here in histogram format. 2 months ago, maybe 3, we came up with currency indexes, so you can actually visually see what the dollar is doing, what the euro is doing, the yen, the pound, and obviously the other ones too, Australian, New Zealand, Swiss, and CAD. And you can see things on charts that you can't see in the old currency meters, such as, this is not quite a double top. This is maybe slightly more of a double top. You can see trend line breaks. You can see the previous day's low, and when broken, it tends to, most days, trend. As you can see here in the yen, when it went above yesterday's high, it absolutely exploded for an hour and a half. And then you had a little bit of a pullback right here, and when that trend line was broken, it exploded again. Without having a trend line, you really don't know the exact time to get in. Like 1 o'clock right here, 1:15, 1:20. What currency would you have traded this against? Well, the dollar's underneath the previous day's low. The euro broke out above the previous day's high and failed to make higher highs. Went back underneath the hourly in the previous day's high right here. Great place to sell the euro. So when the yen exploded up here at 1, obviously the dollar was already weak, the euro was weak, and so was the pound. They were all underneath their hourly moving average. So you could have traded any of those at that 1 o'clock. Here's after 1 o'clock, and as you can see, absolutely astronomical drop of over 125, 130 pips at that point. We had the pound underneath its hourly, so the pound yen is very likely to drop massively at that 1 o'clock time frame too. As you can see, same thing, 100, 150, 160 pip drop. And of course the dollar was also underneath its hourly, so the dollar yen's also going to fall like a rock at that time. It's less volatile than the other ones, but you can see about a 70 or 80 pip drop. And without our currency indexes, you just don't really have a feel for that. And you also can't draw fibs on the actual individual currencies. For example, this drop from here to here, you have that fib target down there, which it never quite made it to. But let's try the dollar here, from here to here. This is an area where you're likely to get a little bit of a bounce. You have our containment bands on each individual currency. And you got a little bit of a bounce the first time, second time, slightly up. And when you see that, it really helps you pick where it's going to end. So, for example, on this move, notice it went right to the 1.382 fib target. And this is a Japanese index that we create that no one else has, which kind of just proves that Fibonacci's work, not because everyone has them and looks at them on a chart, just because it's a natural human reaction to not want to pay too much for something. If something's going up, it's fine to get in and pay extra and pay extra and pay extra at some point, but eventually there's no more buyers, and the Fibonacci profit target kind of determines that. And you can also use it to buy pullbacks. In other words, this huge move up, if you draw your fibs, getting in at the 38 to 50% pullback zone is a pretty high probability place in this area. Very decent play. This is where it becomes relatively safe to buy the pullback. And especially when you have Fibonacci's and you're waiting for a trend line break, you got in here, maybe you got out with a little loss, you got in here a little bit, as you can see, even before 1 o'clock, 15, 20 minutes later, boom, you made your money. And you knew when to get out too. And that's why the currency indexes are absolutely phenomenal. Let's take a look at one more example to end today's short blog video. Underneath the lower containment bands, it's very likely to kind of reverse, and when you see it not able to make lower lows and then breaks out over the trend line at 8:45 today, even though the trend's down on this, you're likely to get some kind of a bounce. So what currency was likely to come down at that time? The yen's up too much at that point. The euro just broke down. So the euro New Zealand at 8:45, very high probability one to be selling. 8:45. And as you can see, this one was way above its upper containment band, and if you were actually trading this, you might have a trend line off of these and started getting short here and obviously got short there. This actually coincides with the 8:45 reversal that I just showed you. And so it's above or upper containment bands, usually very likely to reverse. After a trend line break, most trend line breaks don't go your way immediately. They kind of go your way, then they get a pullback, and then the second wave is the big one. Because I have automated trend line break systems, and I had to put in second and third entry methods because the first trade oftentimes was a loser. Even though I would look at the trade later and it went 30 to 80 or sometimes 100 pips my way, this is oftentimes what happens. So you might make a little bit of money, and then if you scale out a part of your trade and you get out and you break even on the other half, and you're sitting there on the sidelines where the thing explodes. But you can see, using the currency indexes, absolutely found that trade at 845, because this one, it's underneath the lower band, it's breaking out over this trend line, and the euro, first of all, broke its trend line an hour before. So now you had an hour before to start looking for sells in the euro. You can see the dollar started breaking out even before that, you know, around 8, and especially later it started going up. The euro dollar is also an excellent, very high probability, probably 80% likely to work, trade at 8 o'clock. This is one where the euro's weak and the dollar's strong. Here's 8 o'clock right here. You can see the trend line on that, especially if you take it back to here. It's pretty much right at that point. So you have a trend line break. This one did go your way. And guess where it stopped, right at the lower band. Our perfect oscillator is showing a minus 80 extreme reading. Most of the time, these minus 80 readings are where you want to get in and out of trades. As you can see, most of them are going to be the end of the move. Notice this move up here, end of the move. And this is very close, and this is very close to the minus 80. This one right here kind of drifted up and down. So every single one of these plus 80 perfect oscillator readings worked. This one worked, this one worked, this one failed, this one worked, this one down here worked, this one worked, this one worked, this. All of them worked except one. You know, so that's pretty good odds. Perfect oscillator is an amazing tool, and when you use that on the actual currency indexes, you know, use the currency indexes to find the ones to trade. If you think you're going to get a reversal, if this perfect oscillator on the individual currencies at an extreme, it adds to your probability at a very dramatic way.